What's going on, my fellow wealth creators? Matt AS here. In this video, we're going to have some fun breaking down the term infinite banking, deconstructing it to see if it's actually misleading or not, because apparently it is, and it's because there's nothing infinite about it, which is not true, and there is no bank involved, which is true, because instead of a bank, we're using custom designed, high cash value, dividend paying whole life insurance, which is no secret. It shouldn't be anyways. So there's no bank involved, but I would say that's actually a good thing. That's kind of the point, right? Is to get our money out of the banking system. Not all of it. I still have some money in the banks, but I've moved a large portion of my safe money into my policies to start my own banking system. So granted, even though there's not a bank, it allows you to take back a lot of the banking functions in your life. The things that you would normally go to a bank for, you're now able to do yourself. And the benefit of that is you recapture a lot of wealth over your lifetime, guys. I've done lots of videos on this, breaking down the different numbers. I might go through a couple examples in this video, but suffice it to say that when you're able to when you're able to take back control of like having to go to the bank for a loan, credit cards, things like that, when you're able to recapture those things and you put it into an asset that's actually providing an incredible amount of benefits for you, where you're going to get uninterrupted tax-free compound growth. You have the death benefit, you have living benefits, you have cash value that you have access to without having to go through an application. Doesn't matter what your credit score is, doesn't matter how much money you're making, right? You can access that money for emergency, business opportunities, whatever. That to me is far better than storing capital in a bank. We don't what benefit do we get by keeping our safe money in a bank? Again, we're not taking all of our money out of the banking system. I have some in the bank to cover, monthly living expenses. But other than that, what does having our money in the banks actually do for us, right? Really think about that. That was a big light bulb moment for me. It's like, well, yeah, it's not really doing much for me. I mean, I'm earning a little bit of interest, but I pay taxes on it, and it's not really that great. Historically speaking, it, they don't pay very well, right? And then I learned about this asset, custom designed dividend paying whole life insurance, where I get all the benefits I just mentioned. It's like, well, that just makes a lot more sense to me, especially if I have access to the money to take advantage of other opportunities to build wealth like I normally would. We're going to get into that. But what I want to do is share my screen, go through a LinkedIn post, go through the comment section, because it was a really interesting conversation. And the gentleman brought up the issue of the term infinite banking being misleading. And he brought up some valid points that I think are worth discussing. But for me, implementing infinite banking for the past year and a half now and stuff, like some of the things that he's bringing up are easily addressed, in my opinion. That doesn't mean that they shouldn't be addressed or brought up to people, because obviously people are getting in trouble with these kinds of things, lapsing policies and stuff like that. But I think that comes from a lack of education, both on the agent advisor side and the consumer side. Because here's the thing, guys, as consumers, we need to take more responsibility for our decisions. All right. Stop blaming everybody else. Now, sometimes there is blame. Sometimes people are, intentionally misleading, and we have to be careful with that. There's lots of bad actors out there, but we are far less likely to be taken advantage of and far less likely to get in trouble with these types of things if we do our own research, if we educate ourselves, conduct our own due diligence, understand the things that can go wrong, what are the pros and cons, comparing different strategies with different products, right? Really educating ourselves, knowing what questions to ask, right? When you ask hard questions to people and they're not really sure how to answer it, well, maybe they don't fully understand what they're trying to pitch you, right? What they're sharing with you. So these are things that we need to take responsibility for as well, because there's a point that the gentleman brings up. It's like, well, that's just silly. That should not be happening, right? So let's get into it. I really enjoyed this post. I think this is a really good conversation with people. Really good questions were asked. So let's get to it. All right. So we're on LinkedIn here. At the end of this post, this gentleman said, let's talk about the benefits of dividend paying whole life insurance. So he's not even hiding the fact that it's dividend paying whole life insurance. So if you cringe, if you get high blood pressure at the sound of when you hear the term whole life insurance, well, then you can just ignore it and move on with your life, right? But hopefully you're open-minded and you do the research first, determine whether or not it makes sense for you, make an informed decision as opposed to just listening to what someone else told you about it, which is often not true. Doing your own research, but at least you know exactly what the product is. There's no hiding it. You have the infinite banking concept, which is the strategy. And then the strategy itself, and then you have the product that's used to implement the strategy, which is dividend paying whole life insurance, right? So important distinction there. All right, this is where the conversation really starts though. And Seth, if you're watching this, shout out to you, my friend. If you want to get on the channel again and have a conversation about this, I would love to have you. I've actually had Seth on the channel before where we talked about the difference between whole life and IUL. It was a really good conversation. If you want me to send that to you, comment down below and I'll send it. So yeah, if you're watching this, buddy, let's get you on the channel. But anyways, how is whole life infinite? How is it a bank? Is it FDIC insured? So actually, I'm going to, we'll address the FDIC later. Because it's not, I'll just do it really quick, get it out of the way. It's not FDIC insured, but there are state guarantee associations. So if the life insurance company, for whatever reason, went insolvent, then you're protected in that way. But it is a clear distinction to make. It's not actually FDIC insured. When he's talking about FDIC, obviously that's associated with bank accounts, right? You're insured up to $250,000, but there is the State Guarantee Association for life insurance companies, and not to mention that a lot of these companies that we use to buy these policies from, they've been in business for over 100 years, have never missed a dividend payment. They're the strongest companies financially on the planet. They are the absolute best at risk management. So not really too concerned about that, but yeah, it's a good point to bring up. Now, is whole life infinite? How is it a bank? Well, I already kind of talked about it, the bank part of it, where it's not a bank, but it performs like a bank because of what we're able to do with it. So again, if I need to buy a car, instead of going to the bank to ask for a loan and beg for permission to buy this car, to get money to buy this car, I can tap into my whole life insurance policy, get a policy loan. The only questions asked are, how much do I need and where do we send it? It's the only questions that the life insurance company asks. I don't need an application. Doesn't matter what my credit score is. I don't need a what my debt to income ratio is, how much money I make, blah, 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 blah. None of that. The money's just deposited into my account. Okay. Not to mention terms and conditions are far more favorable as well, where if you fall behind on payments, what's the bank going to do? They're going to charge you late fees. It's going to hurt your credit score. They might seize, they might repossess the vehicle. Not going to happen with a whole life insurance policy. Now, with that said, you need to make sure you're making your policy loans, guys, paying back your policy loans. That's an important point that Seth brings up here in a minute. But again, just addressing the question, how is it a bank? It's not, but it performs like a bank. How is whole life infinite? Actually, I pulled this up in ChatGPT. I actually thought it gave a really good answer about this. But first off, it actually provided I think a pretty good definition of infinite banking as well. It's a personal finance strategy that involves using a specially designed dividend-paying whole life insurance policy as a private banking system. I like that. That's really simple, right to the point. That's kind of what it is. It's a strategy. We use dividend-paying whole life insurance, and we use it like a bank. So anytime we're going to make large capital purchases, an emergency comes up, investment opportunity presents itself, instead of going to the bank, we're going to tap into our whole life insurance policy. That's it. All right. Pretty simple. I actually really like that. But anyways, the infinite part. So I asked it, why is the word infinite in the term? What is actually infinite about it? And it says it refers to the ongoing perpetual nature of the strategy. That's actually a pretty good setup for this. But it gives multiple examples of how it can be considered infinite. I think where maybe, and Seth, you can comment or whatever and let me know if this is what you were talking about. But maybe the misleading part of it is like people think that they're going to get an infinite return, or that there's an infinite amount of money that they can tap into once they set up the policy, which is not true. You have to fund and capitalize the policy. Seth brings that up. We'll talk about that in a minute. All right, but maybe that's where it comes from, because otherwise these examples are actually really good examples of the infinite nature of a whole life policy regarding some of the benefits that we get. Okay, so the cash value of a policy is it grows uninterrupted, which is true. So you have the guaranteed growth rate plus dividends, which are not guaranteed, but the companies we work with have always paid a dividend through the Great Depression, great financial crash, pandemic, both world wars, all that stuff, right? Like I said, they're best risk management companies in the world. They're really good at this. So that money grows in perpetuity, like until the day you pass. You're getting that uninterrupted compound growth. Now, the pushback I'll get sometimes is, yeah, but it's only like 3 or 4%. Well, that's I'm okay with that. So number one, you don't set policies up for rate of return. Okay, that's just a bonus, but that's kind of what I expect from a safe money asset, 3 to 4%. And that doesn't take into consideration the tax advantages as well. like what you would have to earn in a taxable account to get the same thing you would get in a whole life insurance policy that earns only 3 or 4% internally. That's not even taken into consideration. But also, where I think about rate of return the most is how I'm using the policy to build wealth, like through private money lending. That's a bit one of my big investment opportunities that I take advantage of right now. When I borrow at 6 and I lend it out at 13% plus a point, I'm going to do that all day long, as many times as I can, right? So anyways, I thought that's just an important point to bring up with regards to the compound growth. Because you'd be amazed at what 3 to 4% can turn into over 3 or 4 decades, guys. It's incredible. All right. So, but it grows uninterrupted even when you borrow against it. Unlike traditional bank accounts or investments that stop compounding when funds are withdrawn, the policy's full cash value continues earning dividends and interest as if the money were never taken out. That is great. I love that. And the reason for that is we're not making withdrawals from the policy. We are taking policy loans, which means that we're using the life insurance company's money to cover the emergency, take advantage of the opportunity, whatever. And our money is still in the policy, getting dividends and interest. Yep. So number 2, lifetime access to capital. You can access your policy's cash value at any age for any purpose, whether it's for business, investments, real estate, retirement, emergency. Heck, you could use it for a vacation if you wanted to. I don't recommend it unless your policy is very matured. You funded it properly. You still have plenty of cash value left over if you do that, right? But you have lifetime access to the capital, right? Again, this is assuming you're paying your policy loans back, guys. I don't know why on earth anybody who is talking about the infinite banking concept would tell you that you don't have to pay your policy loans back. If you don't, your policy will lapse. Okay, unless you're specifically using it for tax-free retirement income, you're being very conservative with it, then that's the only scenario where you're not paying a policy loan back, and the death benefit will cover whatever your policy loan balance is when you pass away. But even that, you still have to be careful. You're using leverage, and that loan is going to compound against you when you're not making policy loans or payments back to that policy loan. I want to be very clear on that. Okay, so with that said, assuming that you're being a responsible banker, a responsible person with your policy, as you pay back policy loans, that money is instantly restored in cash value. It's now available again to use for whatever you want. And so I continue to have access to that capital throughout my lifetime. So a really, really powerful benefit, in my opinion. And for any purpose, I don't have to explain what the money's for, unlike traditional banks where loan approvals are subject to credit scores and external control. Policyholders have unlimited private access to their own capital. I love that. Now, I do want to bring up something that Seth, like one of the bullet points here that Seth brought up that I do think is really important. I think it was down here. All right. And he's talking about, yeah, right here. It's not infinite at all. You have a finite amount of cash value to utilize before the policy is in jeopardy of lapsing. And if there is a gain, would create taxes. So this is a good point. All right. Because again, like I could see the argument of like for the infinite part of it, like having infinite money, but I don't know. I feel like that's, I mean, is there people really thinking that, guys? Like, do you really think that if you set up a policy, you're just going to have infinite money that you didn't have before? That's just not true. As far as what you have access, like you have a much larger amount of death benefit than what you put in, but that's not what you're able to borrow. All right. That's just your death benefit, right? That it would cover a policy loan balance if you passed away and you had a policy loan balance, but it's not like you have infinite money created here. I don't know why anybody would think that or suggest that. The amount of money that you have access to is based on what you put into the policy. And if you set it up for high cash value, you typically have 80 to 90% access to your money within the first 30 days. But you have access to what you put in. You don't all of a sudden just print a bunch of money out of thin air like the government does. That's not how this works. With that said, I do think that's an important point to make, and why infinite banking is not right for everybody. Because if you can't properly capitalize and fund your policy, well, you're not really going to get as much benefit from the strategy as you could if you focus on your income and cash flow first. Learn how to increase your income so you can put enough money into the policy and really start to have it, really start to be able to take back some of the banking functions in your life, right? So this is an important point to make. Let's go back to the other infinite parts, and then we'll finish up on the post here because he makes he brings up some other really good points. But the infinite part, there's no expiration, works across generations. I think actually this is one of the benefits that I think really attributes to the infinite aspect of the term is because it's not just for one lifetime. It can be structured to last beyond your life. The death benefit funds the next generation's policies, allowing wealth to be recycled infinitely within a family rather than being drained by taxes, fees, or banks. This is how families use it for multi-generational wealth building. Beautiful. So a book for this part that I would absolutely recommend is The Rockefeller Method by Garrett Gunderson. He talks about how families like the Rockefellers have used life insurance to perpetuate their wealth by like multiple generations. And one of the strategies is not always how it's done, but this is one of them, is you buy the life insurance policy, the death, you make a trust the beneficiary. The proceeds go to the trust, which then distributes those proceeds accordingly, according to whatever instructions you leave. But typically the trust is going to buy more life insurance on the next generation, and it's going to repeat the process over and over and over again in perpetuity, assuming that that generation doesn't completely screw things up. But when you do it with a trust, it's pretty hard for them to do. So yeah, that's a really cool aspect. Infinite uses and flexibility. So yeah, there's no limit to what you can use your policy for. You don't have to explain why you're using your policy. With that said, that doesn't mean that you could just, I wouldn't recommend it anyways, take your policy loan and just blow the money because you think you have infinite money now. That's just stupid. That just shows an incredible amount of ignorance and a lack of education. You really need to educate yourself if that's what you think infinite banking is. Otherwise, you're going to get into a lot of trouble. Okay, yeah, there are infinite uses for it. Technically, anyways. I wouldn't suggest everything, but everything on this list is pretty good. Real estate investing, private money lending. I do that right now. Again, acting just like a bank. It's not technically a bank, but I'm doing what a bank does, where I borrow at 6%. I lend it out on a piece of real estate at 13% plus 1 point. Now I'm creating positive arbitrage just like banks do when they pay us 1% on a savings account and then lend it out at 4 to 5%. That's literally what the banks do every single day. So I'm just repeating that process. Granted, I don't have a bank, but I'm acting like a bank. All right. Paying off debt. This is phenomenal, guys. This is one of the fastest ways that you can start to really build wealth in your life and start to recapture wealth, and is paying off debt, particularly credit card debt, like high interest credit card debt. If you're able to fund your policy enough to where you can consolidate that, oh man, it makes such a huge difference. I did this for my mother last year. We consolidated all of our credit card debt. It was across like 12 different, 12 different cards. And we consolidated them with a policy loan, and it put $800 a month back into her pocket, and her credit score is now above 700 again. It's just incredible. Starting a business. This is phenomenal for business owners. Like, to me, this is just a no-brainer for business owners, because you can essentially become your own source of financing you'll likely get far better terms and conditions than whatever your current lender is providing to you. Like, it's just incredible what this can do for a business. And I mean, most businesses need capital and funding. Well, what if you didn't need permission for that capital or funding anymore? What if you had interest rate protection as well? Like, I know there's like some crazy high interest rates on some of the lines of credit out there and different types of loans and stuff. You could get interest rate protection. Plus, again, your money's getting uninterrupted compound growth while you use it. You have the death benefit to protect your loved ones. Why on earth would you not utilize this in your business? It doesn't make sense to me. All right. Funding for tax-free retirement. Again, I'm not a huge fan of like really leveraging the policy for this. If you do it conservatively, it's fine. And if you wait, make sure that your policy is matured and, you're running conservative illustrations for that, fine. You could also turn your dividends into an income stream. Is it going to be like tons of money? No, but it's tax-free, and it's meant to be supplemental, guys. Like, life insurance, I don't think is meant to be a vehicle that generates a lot of income for us in retirement. It can provide supplemental tax-free retirement income, but it certainly shouldn't be the primary source of our retirement income, in my opinion. But lots of different uses. Become your own bank forever. Since banks make money by lending out deposits, collecting interest, infinite banking mimics this process. Except instead of paying a bank, you pay yourself, right? Because when you make those policy loan payments back to your policy loan, that money is instantly available back to you again. When you pay a bank loan, are you able to call up the bank and say, hey, that $1,000 I gave you last month, can you give that back to me? No, you can't do that. With your whole life insurance policy, you can absolutely do that. All right, as long as you keep funding, borrowing, and look at this. This is the most important part, guys. Repaying the policy, it should say policy loan. Repaying the policy loan, this system remains self-sustaining indefinitely. There you have it, right? But again, that's why it's not for everybody, because you do have to fund it on a regular basis, not for your entire life, but you do have to fund it. You do have to repay the policy loan back. You do that, it is a system that's going to grow indefinitely. You do it right, it's pretty amazing. So with that said, one final thing I wanted to do with the bank part, and then we'll finish up with the post, because he brought up some other good points, is again, addressing the bank side of it. And I just said, what is a banker? At the end here, it says, in the broadest sense, bankers exist to deliver financial products and services to their clients. So then the next question is, okay, well, what are those financial products and services? So I asked that. And here are the primary financial products and services that banks offer. So again, while this is technically not a bank, it's dividend paying whole life insurance, and we're just using a very specific type of strategy. We are taking back a lot of these products and services and putting them back into our own lives, as opposed to going to the bank for them. So I'll get to the deposit accounts in a second, but these are the easiest loans. I've already given multiple examples of this. I don't need to go to a bank for a loan. Now, it's not to say that I'll never go to a bank ever again, but for the majority of the large capital purchases that I make now, I don't need to go to a bank, right? I'm about to help my lady finance a new car through the banking system. I purchased my vehicle with it. We consolidated debt with it, all this stuff. And of course, I use it for wealth building opportunities. But yeah, so I can give myself loans. I don't need credit cards for emergency funds anymore. I still use a credit card, but I pay it off every month just to get the cash back and rewards. But I'm not relying on credit cards to put food on the table. Now, if you're in that position, there's likely a cash flow problem. You need to fix that first before you even consider something like infinite banking. You have to be making money. You have to be able to save money on a regular basis in order to implement this. All right. But once you get it in place, you don't need to really rely on credit cards for emergencies and stuff like that anymore. Your whole life insurance policy becomes your emergency fund. Deposit accounts. Okay. Obviously, we're not making deposits into life insurance because there's premium payments due. However, one of the big aspects of infinite banking, at least for me, was the mindset shift, the shift in thinking about money. So I make annual premium payments on my policies. I really look forward to making my premium payments. I actually consider it a deposit into my own banking system, even though it's not a bank, it's not a deposit, it's a mindset shift. It's a way of thinking and understanding about the money in your life, your own personal economy, because I know that when I put money into my policy, I'm going to have access to the majority of that money over the course of the year for emergencies and wealth building opportunities, right? So just like I can, well, I'm not going to go down that rabbit hole, like where I can take money out to the bank and do this, whatever, because it's a little bit different. You have interest on the policy loan, which is another conversation. Maybe we'll get into as we finish up the post. But anyways, I think of my premium payment as a deposit because I have access to the money. All right. Obviously insurance is taken care of there, because we have the death benefit, wealth management services. Not saying that we can't use banks for certain types of wealth management, but I certainly don't want anything to do with it because I've taken back control of that. The life insurance company is managing the money I put into the policy in their own general fund. Right. It's like I said, the policy typically will net 3, 4, maybe 5% over the lifetime of the policy. I'm good with that for a safe money asset. And then I'm going to use the money in the policy to actually build wealth on an active basis. My way of doing that is real estate, private money lending. You don't have to do that. Figure out what's best for you. All right. So that's how, even though it's not a bank, we're taking back a lot of the banking functions and products and services that the bank offers us as kind of irrelevant or becomes more irrelevant over time. Now, I do want to finish this, some of the points that Seth brought up here. Let's see, what whole life carrier supports the concept of infinite banking? So, there's actually like some of the companies that I work with don't mind. They like some of the top mutually owned life insurance companies have come out against infinite banking. And I can see why, because, like I said earlier, there's bad actors out there, there's bad information and stuff. You do have to be careful, right? Make sure that you're disclosing that this is whole life insurance. There are risks involved when you're taking policy loans, if you're not responsible with them, et cetera. So I get that. So I don't know that they come out and like directly endorse infinite banking, but I know companies that don't mind. I call up companies that I work with. I'm like, hey, this is what I'm trying to do with the policy. And like, yeah, I know exactly what that is. I've spoken with people at the company talking about infinite banking, and they don't have a problem with it. So, they're not going to come out and like directly endorse it, but some of them don't really have an issue with it. And just because a company wouldn't endorse a particular strategy, that doesn't mean the strategy doesn't work, right? I don't care if the company comes out and supports or endorses infinite banking. I'm just going to implement it. It doesn't change how I implement the strategy in my life at all. Loan rates. What are the loan rates on that whole life when I borrow the money? So I don't. So what he's trying to say is that here it is. What if dividend rates are lower than the loan rate? It doesn't matter. Now, I'm not saying that we shouldn't consider the loan rate, okay? But this is not an argument, a very good argument anyways, against dividend paying whole life insurance, because oftentimes the loan rates are going to be a little bit higher than the dividend rate, but this is a fundamental misunderstanding of the different types of interest and how they work. So with policy loans, again, assuming you're paying the policy loan back like you should, just like you would a normal bank loan, okay? Assuming you're doing that, you're paying simple interest on the policy loan, which means that as you make payments back to that policy loan, pay that policy loan back, you're lowering the balance. And so whatever the interest rate is, it's being applied to a lower and lower balance. So you might have a higher interest rate, but that doesn't mean that's how much interest you're actually going to pay, right? Because if I start out with a $100,000 policy loan at 6%, if I don't pay that policy loan back at all throughout the year, I'm going to pay how much in interest? $6,000 in interest. That's going to be added to the balance. And now I'm going to pay 6% next year on $106,000. So you can see if you don't pay your policy loan back, you can get into a lot of trouble. That's why you always pay them back. However, if I take a $100,000 policy loan, and I'm just going to switch this up a little bit. If I take a $100,000 policy loan at 6%, but I make $1,000 a month payment throughout the course of the year, I've reduced the balance by $12,000. Now that interest is only being applied to $88,000. So I might have a higher interest rate, but I have a lower balance that it's being applied to. So over time, I'm going to pay far less interest. My effective total interest, or my total effective interest rate, whatever, at the end, once that policy loan is paid off, is going to be a lot less than 6%. That's how simple interest works with these policy loans. When you're actually when you actually schedule payments to be made to pay that policy loan back, versus compound interest, I could make a 4% internal rate of return on my policy. So you would think, well, I'm paying 6, but I'm earning 4. That's a disaster, right? No, it's actually not. When you actually run the numbers, which I've done a multitude of times on my channel, I've actually shown an example where you could pay 8% on your policy loan and only earn 4% in your policy. Over 5 years, you would end up with more money and earned interest from the policy because it's compounding versus what you paid in the loan, even though the interest rate was twice as much, right? That's the difference between compound interest, because with compound interest, that interest is being applied to a higher and higher balance versus the simple interest being applied to a lower and lower balance. Now, again, I'm not saying we shouldn't pay attention to loan interest rates. We do want to take that into consideration, but this is not an argument against dividend paying life insurance. You're focusing too much on the interest rate as opposed to how much interest you're actually paying versus how much interest you're actually earning. So keep that in mind. Now, with that said, too, I think it's important to make sure that we're utilizing our policy to build wealth. We don't, in my opinion, want to be using our policy to buy groceries and go on vacations and stuff like that. You can, and if you're going to do it, like the vacation, if you're going to do it, doing it in the most efficient way possible, which would be to take the policy loan, put it back, because that way your money's still growing uninterrupted. All right, but you just got to make sure you're diligent with that. I just think that that your cash value is better served moving the needle forward with regards to the wealth in your life. So that's why I love borrowing against my policy and then lending it out at a much higher interest rate than what I'm actually paying. All right, so I borrow at 6, lend it out at 13 plus a point. I'm going to do that all day long. All right, so that is it's not a very good argument against whole life, but it's a good question. I had that question when I started going down this journey, but then I ran the numbers myself. I was like, holy smokes, this thing is incredible. All right, so let's see. You don't have to. They are rhetorical. No, actually, they're not. I bet the answers that I gave were not the ones that. I mean, you would probably disagree with what I said, but the numbers are the numbers. I mean, we can actually run some math here, and I can show it to you. IBC is misleading. False assumption on whole life insurance, no different than bank on you. We've already covered that. It is life insurance. It absolutely is, and I do think that distinction needs to be made. that we're implementing a strategy here, but the tool that we're using, the asset, is whole life insurance. Okay, let's see. And then let's go down here. We talked about some of this, so the finite amount of cash value. All right, you can pay those policy loans back, but a lot of policies that they review, people are not paying the policy loans back, which I don't know why on earth that would be the case. That is just very dangerous, and shame on the agent and advisor for not explaining it. But also, again, guys, as consumers, take some responsibility. Make sure you're doing your due diligence on this stuff. All right. It falls within completely different tax codes. Yeah, I mean, we're getting really into the technicality there, but I think as long as you're making that distinction that it's life insurance, it's not an actual bank. It's a banking strategy. It's a banking type of system, based off of how we utilize it. I don't have a problem with the term infinite banking. I did not feel misled by the term infinite banking. As I started going down this process and just educating myself, there was no point in my journey that I felt misled. Like, hey, there's nothing infinite, and hey, we're not using a bank. Okay, I want nothing to do with this now. It's just, I care about the benefit that I'm getting from the strategy. Does it make sense to me? If yes, then I don't really care what you call it. But that's just me. All right. Let's see. I think that's it. Like I said, Seth, really sharp guy. Brings up some good points. I think they're pretty easily refuted. But like I said, too, I'd love to Seth, if you're watching this, get on the channel, brother, and let's have a conversation about it. I think that's where people learn the most, is when you hear both sides of the story. So I appreciate Seth bringing this up. And hopefully me addressing what he brought up helps you along your journey so that you can determine whether or not this strategy makes sense for you. It does not make sense for everybody. Everybody's in a different place in their life right now when it comes to their finances. And, you have to be in a certain place in order to at least to start considering it. Otherwise, you need to focus on income and cash flow, get your debts under control, things like that. Whole life insurance can absolutely help you consolidate debts and pay debts off faster, but you have to be in the right financial position for it. You got to be able to save money on a regular basis. Otherwise, the strategy is not it's not going to work for you. Okay. So anyways, I hope that helps, guys. If there's any questions that you have, also, I would love to hear your feedback as well. I'm sure we're going to get some good feedback on this one. Drop that down in the comment section below. Make sure you check out my Infinite Banking Masterclass as well, where I go into a lot more detail about infinite banking, how I'm using it in my life. I show you my policies and all that good stuff. So make sure you check that out. All right. And I'll talk to you in the next one. Matt AS is out.